The world was beginning to relax a little bit over the last fag end of the last year. Everybody thought that the Fed was nearly done with rate hikes and maybe there will be a pivot point at some point during the year. But now, after the data of the last week, everybody is reflecting once again on whether it is indeed the case or whether inflation continues to linger and the Fed will remain or keep rates higher for longer. And that seems to be a kind of reassessment which is going on globally. How do you read that situation, the recent data, and the risks that it might pose for the market?
Certainly, Udayan. First of all, thank you for having me here again on your show. So you're right. Last few days, I mean, first of all, if you see year to date, the markets have had globally a good start. US markets, if you see, Nasdaq is up double digits, some 12% or so. S&P is up more than 5%. So yes, it is continuing, I think, to believe that we are towards the fag end of Fed hikes and the inflation problem. But the very recent data points, as you alluded last week or two, what they are suggesting is the economy is much stronger than what the market was anticipating. A lot of macro experts or gurus were expecting. Now, generally speaking, economy stronger is good for the market. But this time around, the situation is that people are hoping that a somewhat softer economy is what the Fed is desirous of, because a softer economy would mean further reduction in inflationary pressures at a quicker pace. So it's a mixed one, I would say, Udayan. On one hand, what it is suggesting is that the economy is not falling off as rapidly despite the hikes in interest rates over the last 12 months or so. Inflation, all said and done, has been coming down. Yes, it's not come down as rapidly in the last couple of data points, let's say, as we would like to see it come down. But it also brings the interesting question that can we achieve a reduction in inflation without really, throwing the economy into doldrums? So maybe it takes a little longer for inflation to be tamed to its to its levels that are, let's say, 2%, or whatever is the target range of around 2% that the Fed talks about. Can it be brought to that, even if it is on a longer trajectory, but without throwing the economy under the bus? So I think it is a mixed data points over the last few days. I won't read it as completely negative. To me, the strength of economy is a positive.
Now, only to the extent of what it means for global flows into India. I know the markets held up last year because of domestic flows, but foreign flows are also important in their own way. But last year was not very good in terms of FII flows. If interest rates in the US are to continue to rise or remain high for much longer, what does it portend for 2023 in terms of FII inflows?
Again, I think there'll be both sides, Udayan, the growth aspect as well as the interest rate aspects. Hard to just look in isolation the interest rates as a factor. You would recollect very well during 2003 to 2007, in the midst of rising Fed rates, the flows were still very strong because the economies all around the emerging markets were booming. So I think there is still possibility that interest rates remain. And we have to remember the data points aren't like a reversal or a major reversal. We are talking about, interest rates peaking instead of 5.25 to maybe 5.25, 5.5, or thereabouts. It's maybe a somewhat higher, not a dramatically higher regime that we're talking about. If for some reason inflation were to have a revival to higher levels, and then that means a substantially higher interest rate regime than what can be considered within a ballpark of where we are today, and then that forces a much sharper slowdown down the road for the global economy and the EM economies, that could be a negative scenario. But if it is, we're talking about, modestly higher interest rates, but an overall stronger economy, without doing as much damage to the economy as was afraid last year, as was feared last year, then net then might not be that negative for EM flows. And India being, as you know,
Okay.
nearly
Speaking of
80% of Indian flows are a
yeah,
function
please go ahead.
of EM flows. So if EM flows are to turn south as they were last year, then India can't be, aloof to that. Uh, so that remains to be seen on how EM overall does in terms of flows.
If you like the video, do like, comment, share and subscribe.